Archover is a crowd lending platform, or a marketplace lender, if you prefer. What we're doing is we're facilitating fixed-term loans to companies, established companies in the UK. Usually, loans are usually for about 24 months, about £250,000. They are always secured on the borrower's accounts receivable, or their debtors, which of course limits the number of companies that we can facilitate lending to. So that's in a nutshell what we do. So just go into that in a little more detail so that you can see how secured and insured works and what flows through that. So the first thing you need, of course, is a borrower, a company, always a company, and at the moment, always a company in the UK. That company will have customers. It needs to be selling to those customers on credit, i.e. it is raising invoices to those companies, to those customers. That creates a pool of accounts receivable, and it is that pool of accounts receivable which we are levering against when we are lending. So, if you like, we are looking through the balance sheet of the borrower to the balance sheets of the borrower's customers, and the creditworthiness of those customers. So, allowing the borrower to do that has a tendency to lower the cost of borrowing, of course, for the borrower. We don't interfere with that relationship between our borrower and our borrower's customers. The cash flows back from the accounts receivable direct to the borrower. We believe it's actually very damaging to interfere with that relationship in the way that perhaps a factor or an invoice discounter would. Over here we have those who provide the money to lend across our platform. It's not our own money that we're lending. We have a mixture of lenders, those with nice porticos, the institutions, the family offices, etc. that come and lend, and individuals also coming to lend. Everybody lends on exactly the same terms. There is no favouritism given. Everybody is treated fairly. Their money, the lender's money, all flows through client accounts, trust accounts if you prefer, accounts on which Archover has disclaimed all economic interest and notified our bank of that. So, not our money. The loans that we provide are up to 80% of the value of the accounts receivable. So what we're looking at when we are doing our own credit analysis on the borrower is a company that can reasonably provide that security over the period of the loan. So we're very much looking forward with the borrower companies. Yes, history tells us some things, but it's more about the future of those companies and whether they can reasonably provide the security that is required and pay the interest. Usually the interest is paid monthly, and repay the capital. Usually the capital is repaid at the end of the loan. Interest is paid by the borrower, of course, goes through the client accounts, and we distribute it to lenders, as does the capital repayment, as I say, usually at the end of the loan period. If you come to us as a borrower, potential borrower, and wish to borrow over our platform, we insist that you put credit insurance around the accounts receivable. We've just actually entered an agreement with COFAS, the world's second largest credit insurer, to provide that credit insurance. We've bought what's known as a wholesale policy, which will help the borrowers get the cost of that credit insurance down to a more reasonable level. If you look at the statistics, something like 80% of the reason why companies that borrow money don't repay, it's because their customers don't pay them. Take that risk away or drastically reduce that risk, obviously enough, you're rapidly increasing the security offered to the lenders. We also take a first charge over the accounts receivable, but only over the accounts receivable, focused on those accounts receivable. So other crowd lending companies, other banks, etc., can come in and secure loans against the property, against the plant and equipment, and our loan happily sits alongside that. And that's what we do. Now, the type of borrowers that we've got, as I say, they've got to be selling on credit, so they're usually business to business. In order to make this cost effective, they've really got to be borrowing more than £100,000. Much below that, and the cost of the credit insurance, more than anything else, make it uneconomic for them to borrow, across our platform anyway, which tends to imply that they'll have a turnover of at least £1.2 million. Usually the companies that we're facilitating lending to are a bit bigger than that. As I say, the average amount borrowed is about £250,000. Lender security runs through everything that we do. We put detailed project information onto the platform. This is a project-by-project platform, so you as the lender can see what you're lending in and make an informed decision. Double due diligence, yes, of course, we are doing credit analysis on the borrower, so too is the credit insurer. It's secured, as I described before, it's insured, or not, the loan is not insured, we must be clear on that. It's the accounts receivable of the borrower that are credit insured. We, on the credit insurance policies, we are always the loss payee and the joint insured. Now that does a number of things for us, three principally. As the loss payee, if there is a claim under the credit insurance policy, then the cash from that claim comes to us, and we can then decide whether the loan-to-value ratio is still sufficient. If it is, then that cash can go back to the borrower. If it isn't sufficient, then that cash will go to the lenders to keep that loan-to-value ratio approximately where it was originally set. We're the joint insured. That means two things. The principal thing is a protection. If we get into a position where the borrower is not behaving for some reason, then as the joint insured we have the right to sell the accounts receivable of the borrower to the credit insurance company for a discount admittedly, but remembering that we have the headroom within the loan-to-value equation. We can then therefore get the lenders back into their cash. Interest would be foregone, but they're back into their cash quickly, and it is the credit insurer's problem to collect out those debts and deal with the suppliers. If you come onto the Archover platform and you make a loan, we always say to people in the first instance that you're committing for whatever period that project is for, be that 6 months, which is the shortest we've ever done, be that 36 months, the longest we've ever done. In actual fact, there is actually an active market on the Asset Match platform, whereby you can sell those loans or portions of those loans. And as I said before, all the money passes through client accounts. Nothing gets mingled or mixed with Archover's own money. So what have we done so far? That figure actually was written down on Friday, and that's now a little bit out of date. So we're, I think, now nearly 7.8 million lent, £250,000 average loan size. Got a growing funnel of potential borrowers. I think that's We spent a lot of time over the last year, we've been trading now for just over a year, refining our assessment of the borrowers and working out exactly what they want and what they mean when they say various things to us. I'm sure we're not through that, but there's more than £20 million in that funnel that's well qualified. I had the pleasure of being the fastest growing crowd lending platform in the UK in the first 6 months of this year. Nothing that we have done has gone into default, nothing has gone into arrears, and there have therefore been no losses, which isn't a bad way to start. What we do have are a lot of systems and procedures to monitor the loans once they have been made, monitor what the borrowers are up to, and monitor their reporting to the credit insurers, so that we keep in that happy position of having no defaults, no arrears and no losses. A couple of examples of companies that we've facilitated lending to. This is a company called TRC Construction. They make the sash windows that are in that rather nice stately home, and as you can see, £1 million over a 24-month period. Sorry, I thought there were a couple more examples of loans that we'd actually made, but perhaps not. We're part owned by the Hamden Group. Hamden are perhaps the largest institution you've never heard of. They are the largest managing agents in the Lloyd's credit insurance market. They talk on any one day for 40% of the votes in Lloyd's, about £2 billion, have somewhere over £100 million on their own balance sheet. They are the second most active lender across our platform, as well as having invested in the company. Fairly experienced team of people. We're growing quickly. If you'd like to talk to us, I'd be delighted. That's us, sorry. Perhaps, I don't know, have we got time to take some questions?